Good day and Happy New Year to all. I'm Ira Epstein, and here we are back with our first publication of 2023. I took the weekend off, folks, so you can blame me. I just played it easy in a robe the whole weekend and did nothing. And I mean nothing at all. It was needed. If you'll notice, there should be some new coloring. This should look better. We've put in some new lighting systems, and I hope you like it. So let's talk about what's going on. Here we are at the beginning of the year. Obviously, there's several events you have to be concerned about. U.S., world, recession possibilities. How's the war in Ukraine going to go? And later in the year, what happens between Taiwan and China? If you were to ask me the three events of the year we should be concentrating on, those are them. Will any pop up right now? No. This is all about at the beginning of the year. People, funds, deploying new money, trying to figure out what they want to do. What I found interesting today was that the gold market was up rather sharply along with the U.S. dollar. Now, normally, they have been going the opposite. If the dollar has been strong, gold has been coming down. Opposite today. Don't know if it's money deployment, quite what's going on there. We're still seeing a continuation of bonds and notes rally a little bit. The dollar was up today. It put a lot of pressure on all the energies, and the energies are concerned about, is there going to be a recession? How deep will it be worldwide? What's it going to go to the demand of the markets? You've got that part going on. As for the dollar, as I said, it was up strong, 104 points. That is 30 points off the day's high, but a very strong day. And it put pressure, obviously, on the other currencies that are right behind it. But this is about metals, so let's go to the metals and see what we've got. First, for the week, you're up nearly 1 percentage point, up 0.96. When we look at a daily chart, you're still in this range, but it's trying to lift itself. It's been coming out of that for a while. Hasn't been anything stellar, but I can argue, if you look at the pattern, you've still got higher lows, higher highs. That part of the market is bullish. The market has held the 18 and the 200-day average test. You had a bullish crossover. And what do I mean by that? Let me just come back with us just a little bit here, right over here. If you take a look on this day, and this was Friday, the market had not crossed over. You had an 1808.70 to an 1809.40. The crossover in the market, the bullish part of this, took place today as the 18-day average got over the 200-day average. And obviously in the process, and that's not always the case, you made a new high for this whole move. You don't have to go higher. It's done one of the things that generally when you get a crossover, you'll make a new high on that move. I think that did it. Where's the support if the market breaks hard? Back to the 1814 area. What number would you not want to see taken out on a swing line? If you're going to hold the uptrend, I'd call it 1804.20. You don't want to break through that. In terms of the Bollinger Bands, you're fighting at them right now. So this is where I think the market should run into the resistance. My paid subscribers, and we'll talk about that right at the end of this, why you should be considering becoming one of the paid subscribers to get trade ideas, see how they unfold, why they're unfolding in a way with more studies even than this. But I told them today, against that Bollinger Band, why not take some money off the table? And you're overbought. So I'll stick with what I said there. You either embed, which will get me back involved, or if you correct a bit, you get rid of the overbought condition and maybe it sets up a better entry again. The gold-silver ratio is now rallied up to resistance at the 18-day average of closes, the differential between the two. When we look at March silver, it is not embedded. It is overbought. Overbought means the readings are over 70, but not going sideways over 80, both numbers. And it too hit the upper Bollinger Band. I would have told you, hey, that is where the smart money should be coming out of the market here. In the copper market, we have a pattern of lower highs, lower lows with today's action. The market entered a downtrend. Now, when I look at the market momentum here tonight, you have a 28 reading. My filter is a 30. When a market is under a 30 number on the downside and the trend is down and the buy is down, I'm really not interested in putting out new short positions. Short is the way to be, but I'm not interested in joining the camp since it's oversold. That filter has served me well many times. Can it go lower? Sure it can. It's just not the way that I'd want to enter the market. I see resistance at 381.55. You'd get the market negating the downtrend if you got over 3 right here, 87.35, but that's a ways off from here. In the platinum market, you've now been up and over the upper Bollinger Band, potentially right now the 4th day in a row. You rarely go to 5. We're just at the beginning of trade, and the market's going to fight a battle probably in this 1095.20 area, which is the upper Bollinger Band. So any number under that keeps it away from having that 4th day in a row. No magic. 5, getting beyond it is very unusual. So this is a zone in that market where it should have a lot of resistance. In the palladium market, we had a bear market rally that carried up to what I call the line in the sand. Consider the 18-day average of closes the line in the sand. When the market closes over it, you have upside bias, under it bearish bias. Well, you've got the trend up, but the bias down. I don't see anything to do in that market. And in the dollar index, if you take a look at what we did last Friday, we went down, challenged the lower Bollinger Band, and flipped right away from it. Exactly what I teach in my courses and that what I think you should pay attention to. Now, you heard me make a statement as to what I do. I know, and I'm well aware that over the weekend, I did not come out and I put out your weekly updates. This is a free update, folks. My paid subscribers got exactly what they paid for. I certainly did all the updates, had them out for them. They were able to see everything through there. But at the end of the day, this is free. It's a feeder into the morning updates for spiders, for ETFs. The importance of the two together, which is what I really like, is one balances the other in the sense that if you're trading DIA, QQQ, TLT, SIL, GDX, any of these that you're going through, GLD, and you're putting them through them, you're trading in the futures these markets because they're based on that, and in the spiders, those. It's pretty darn simple, and they work together. They don't work against each other. They're filters on each other, which makes it phenomenal. Now, how it works is at 5:30 in the morning, I come up typically and put out my futures update. I record it 5:20, 5:30. It's posted ideally around 6 a.m. Central Time. And I start recording my Spider ETF at 9. The reason I do them different, number one, I want the stock market and the spiders and ETFs to open. That's 8:30 Central Time. Number two, the government reports are typically done coming out by 9 a.m., so I get them all. Now I have the impact of that. I can talk to you. We unfold the charts. We put out specific. Buy here, sell there. Here's your stop. Here's your objective. You can keep up, and I follow through each day with it so that you get a pattern as to what they're doing. Am I trying to manage your money? Absolutely not. Am I telling you how I'm seeing trades unfold? I absolutely am. What you want to do with it from that point, that's up to you. Is this inexpensive? Super inexpensive. Why? At the end of the day, we hope that you want to trade through us part of your futures contracts, and that's how we want to earn the business. But in the meantime, how do you get this? Just go to our website. Under the keyword research, everything is laid out there. It explains how it works. You can sign up and get on the list just like that. I'm Ira Epstein. You have yourself a great new year. I will see you all in my other updates tonight and, of course, tomorrow. Take care.